Joining us this morning with his thoughts is Wells Fargo's head of currency strategy and Bloomberg best, Nick Bennenbroek. Good to see you here in person.
Good morning.
So, Nick, what do you make of this mechanism, first of all?
Well, I think, it certainly helps in terms of the future beyond 2013, and we've been moving gradually in that direction. So it's good to have a permanent mechanism in place, but it isn't going to do anything much to stabilise the markets right now.
Well, that's what we keep hearing, is that the leaders aren't getting ahead of the curve.
That's true, and it's probably been true through this whole process. For example, when we initially had the Greek difficulties or the Greek crisis for a while, it took a while till the leaders come to establish this stabilisation fund that currently exists, for example.
Right.
So I believe we're seeing something of a replay, and a lot of the talk in the markets is that we will see something in early 2011.
Seeing something like what?
Well, I think probably what we'll see is an expansion or utilisation of the existing mechanisms. So most likely I would expect we'll see, for example, an increase in the 750 billion euros in terms of the stabilisation fund, and possibly some alternative uses. Even they're talking about, for example, looking at using that fund to purchase government bonds. So I think they will utilise the existing mechanisms.
So you think they'll finally go through with raising the funds on that?
Yeah, and it's
okay.
And again, it took a while to get to where we got in May. It's going to take a little bit of a while to get to where we're going to get in early 2011.
Basically more convincing, essentially.
I think so. It's not exactly a clean process. It's not smooth, but at the end of the day, I think we're going to get there.
Nick, yesterday we had David Einhorn on, the hedge fund manager of Greenlight Capital, and this is what he had to say about what's going on in Europe. I just want you to take a listen.
One of the lessons that the authorities seem to have drawn from the Lehman failure is to not allow anything that is very big to be allowed to fail. And that includes, obviously, any of these European governments. And so it puts itself into a pretty interesting position because you have entities that look like they're insolvent, look like they would default, and the authorities have decided that nothing is allowed to fail.
And because perhaps they've decided nothing has been allowed to fail, that's why they continue to be behind the curve.
Well, I certainly agree with the idea that nothing's going to be allowed to fail, for example. And there's a lot of political will on the part of the Europeans to maintain the euro and to try to avoid these countries going into default. So I think, for example, and too big to fail, we're probably talking about Spain in particular. The European countries have a huge vested interest in ensuring that nothing gets out of hand in terms of market volatility. And let's face it, at the end of the day, countries like the US and Japan, they wouldn't really want to see these European difficulties escalate as well. So I think at the end of the day, global coordination, we're not going to see the worst case scenario come out in terms of...
But if Spain's too big to fail, which I can understand, was Greece too big to fail? Was Portugal too big to fail? I mean, we didn't let those fail either.
Well, they haven't failed yet, and I think the idea is, let's not even let the little dominoes start falling, because we don't want that to even risk that, for example, that it's going to get to Spain, for example, and these types of things. So, again, at the end of the day, I think in terms of the volatility that would be engendered, were this crisis to escalate, were this crisis to be ongoing, the European leaders do want to avoid that. Now, there are different opinions, of course. The German Chancellor, the ECB President, for example. So it's not an easy process to get there. But because of wanting to avoid those types of ongoing, permanent, and really quite elevated volatilities, for example, that's why I think we'll see a more concrete agreement early in 2011.
Well, at the very least, though, even without what you're talking about in 2011, have the European leaders at least stabilized the euro for now?
Well, no, I think, they have probably stabilized it. I think we're going to see volatile trading. I don't think we're going to see the euro fall out of bed. I don't think we're going to go below 130 or down to 125 over the next month or so, for example.
Why not, though?
Because really I think the disappointment would come if we didn't see action in 2011. There is some disappointment perhaps that we didn't get more today or at this meeting, for example. But I think there's also...
You didn't see the euro trade that much on that, though.
No, it went up, it went down, for example. We're also seeing volatile moves in the US with the bond yields going up and down, for example. We're still seeing a huge amount of back and forward trading around the end of the year. And I think there's going to be more severe disappointment and more danger for the euro if we continue into 2011 and we don't see more policy moves.
Nick, thank you so much.